A testament to China's robust entrepreneurial spirit, Alibaba's meteoric rise has been synonymous with the nation's digital revolution. The behemoth, with Jack Ma at its helm, wielded innovation as its most potent weapon, transforming e-commerce at a global scale. However, as it spread its wings across various sectors, Alibaba was faced with a labyrinth of regulatory and legal challenges. By the dawn of 2023, this digital powerhouse, once symbolic of entrepreneurial triumph, was grappling with regulatory scrutiny that threatened to reshape its operations and market position. This regulatory shockwave extended beyond Alibaba's financial metrics, prompting strategic reconsideration and fueling a worldwide debate on the tribulations that tech giants face in an increasingly regulated digital economy. But before we plunge into the intricacies of this narrative, we must first trace the roots of Alibaba's recent trials. Alibaba has faced significant challenges in the past few years, particularly in terms of regulatory scrutiny, slowing growth, and rising competition. The company, once the poster child for China's tech prowess, saw its stock price and market value plunge. For some, it looked like the end of an era. Now, let us take a quick look at the beginning of all of these. In late 2020, Alibaba, like many other Chinese tech giants, was subjected to a series of regulatory crackdowns led by the Chinese government. The authorities pointed to concerns over monopolistic behavior, financial stability, and data security as the reasons for these crackdowns. Alibaba first felt the sting of these measures with the launch of an antitrust investigation that resulted in a record-breaking fine of $2.8 billion in April 2021. But this was just the beginning. The regulatory pressure continued, with additional scrutiny being applied to multiple areas of Alibaba's vast business empire. From tightened regulations on its fintech affiliate Ant Group to closer scrutiny of its e-commerce practices, Alibaba seemed to be at the epicenter of this regulatory storm. The impact of these actions on Alibaba's stock price and public reputation was significant. From late 2020 to 2023, Alibaba's stock price plummeted by almost 50%, erasing billions from its market value. This decline alarmed investors and signaled a need for Alibaba to respond decisively. In addition to regulatory pressures, Alibaba faced increasing competition in China's e-commerce market, a domain where it had long been the dominant player. Up-and-coming companies like Pinduoduo and JD.com began to make serious inroads, particularly in smaller cities and rural areas, introducing yet another layer of challenges for Alibaba. Moreover, the broader macroeconomic environment has been far more favorable. The global pandemic disrupted supply chains, consumer spending habits evolved, and China's economy began a shift towards common prosperity. These factors combined to create a complex and difficult backdrop for Alibaba's operations. Yet Alibaba has a history of rising to challenges. Since its founding by Jack Ma and his team in a small apartment in Hangzhou in 1999, Alibaba has consistently proven its ability to overcome obstacles and drive innovation in commerce, eventually earning its place as one of the world's most valuable companies. However, the intensity of the current challenges prompted Alibaba to embark on a more radical path. Recognizing the need to adapt its structure and strategy to the evolving landscape, Alibaba announced a major restructuring plan in March 2023, heralding a new era for the company. In a move reminiscent of a phoenix rising from its ashes, Alibaba has launched an ambitious restructuring effort. Announced in March 2023, this comprehensive overhaul involves breaking down the company's $329 billion empire into 6 distinct business groups. The primary goals of this move, as explained by CEO Daniel Zhang, are to enhance decision-making efficiency, deepen business synergy, stimulate innovation, and strengthen talent development. The first 3 of these newly formed business groups focus on commerce, one each for domestic core commerce, international commerce, and local consumer services. This distinction reflects Alibaba's understanding of the diverse needs of its customers, both within China and internationally, and the desire to customize its services accordingly. The 4th business group is dedicated to cloud computing and data intelligence, indicating Alibaba's intent to strengthen its foothold in this rapidly growing sector. Given that Alibaba Cloud is already the top cloud service provider in Asia and the 3rd largest globally, this restructuring could potentially accelerate its expansion. The 5th business group covers digital media and entertainment businesses, underlining the strategic significance of these sectors within Alibaba's ecosystem. This segment includes businesses like Alibaba Pictures, Alibaba Music, and the video streaming platform Youku. Lastly, the sixth group is centered on innovation initiatives and other businesses, demonstrating Alibaba's commitment to incubating new growth drivers. This encompasses businesses such as DingTalk Workplace Collaboration Platform and Tamal Genie Smart Speaker. One might question the need for such a drastic overhaul. Why change something that isn't broken? However, in a dynamic and ever-evolving business landscape, what has worked in the past may not guarantee success in the future. While Alibaba's previous one-size-fits-all approach yielded positive results, new realities necessitate a more nuanced and tailored strategy. This restructuring also aims to foster agility. By decentralizing decision-making, Alibaba seeks to enable each business group to react more swiftly to market changes, innovate more freely, and develop a deeper understanding of their respective customers. Essentially, it's an effort to reignite the entrepreneurial spirit that drove Alibaba's early growth. Undoubtedly, such a massive restructuring carries its share of risks, including the potential dilution of the Alibaba brand, possible internal conflicts, and the challenge of maintaining synergy among the different business groups. However, Alibaba's leadership believes that the potential benefits outweigh the risks. Furthermore, Alibaba is not undertaking this journey alone. Several seasoned veterans of the company are assuming leadership roles in the new business groups, bringing with them invaluable experience and a deep understanding of Alibaba's ethos. Their collective task is to guide the company towards a new period of growth and prosperity. Through this restructuring, Alibaba is essentially attempting to reinvent itself. It's a bold move, and only time will tell whether it will yield the desired results. But one thing is clear, Alibaba is not shying away from the challenge. In the next section, we'll explore how this restructuring could potentially pave the way for Alibaba's resurgence. Stay with us. Alibaba's restructuring plan divides its $329 billion empire into 6 independent business units, each focusing on a key aspect of the business: a cloud intelligence group, Taobao Tamal Commerce Group, Local Services Group, Kangyao Smart Logistics, Global Digital Commerce Group, and a Digital Media and Entertainment Group. Its decentralization aims to instill each business unit with increased autonomy and resources, thereby fostering a more agile and efficient Alibaba. Now that we have a solid grasp of Alibaba's restructuring strategy, let's delve into how this major transition could facilitate the company's comeback. Beginning with the e-commerce groups, Alibaba's strategy of segmenting its e-commerce operations allows for the creation of specialized units, better equipped to adapt to their respective market dynamics. This will allow for more targeted strategies, better allocation of resources, and the provision of a more customized offering to consumers. The results could be an enhancement of Alibaba's competitiveness and a potential reignition of its growth trajectory. Shifting focus to the Cloud and Data Intelligence Group, Alibaba Cloud has been a consistent performer in the company's portfolio, delivering steady growth and improving profitability. With the creation of a dedicated business group, Alibaba Cloud can potentially accelerate its growth through investments in technology development, expansion of infrastructure, and deepening customer relationships. Given the rapidly expanding market for cloud computing, success in this area would be a significant win for Alibaba. The Digital Media and Entertainment Group forms another crucial part of this restructuring. As consumers increasingly shift towards digital content consumption, this group could be a significant growth driver for Alibaba. By integrating various digital content platforms, Alibaba could offer a more comprehensive entertainment package to its users, thereby enhancing user engagement and potentially unlocking new revenue streams. The innovation initiatives and other business groups serve as the backbone of Alibaba's commitment to creativity and future-oriented planning. This group provides Alibaba with a platform to experiment with novel ideas, explore uncharted territories, and foster future growth drivers. However, this restructuring isn't solely about business division. It also seeks to strengthen Alibaba's governance structure. As part of this effort, the company plans to establish a steering committee to oversee these independent business groups, ensuring alignment with common strategic objectives while maintaining operational autonomy. In short, through this restructuring, Alibaba is laying the groundwork for a potential comeback by creating a more resilient, agile, and innovative organization. It represents a strategic shift from a one-size-fits-all approach to a more bespoke strategy, from centralized decision-making to a more decentralized structure, and from a broad focus to a deeper concentration on key growth areas. But anyway, do let us know what you think. Thanks for watching.